And it's time we move on to the technical session 2 of the day. This technical session is centered around digitalization and growing share of TDS in domestic taxation. Has time come to incentivize TDS deductors? To take this session forward, we have a very interesting panel. I would like to actually invite our special guests onto the dais, starting with Mr. Ashutosh Dikshit, partner Deloitte Touche Tohmatsu India LLP.
So thank you. First of all, thank you to the audience for staying on after an extensive first half as well as an extensive lunch. My greetings to my fellow panelists, both here on the stage as well as virtually. Today's topic for discussion and the panel is chaired by Ms. Pragya Saksena, member tax policy and legislation in the CBDT. We'd be very happy, and I think all of you will be very interested to know her views when she wraps up this this discussion. So let me start off with a bit of a background, in the sense that we're talking about tax deduction at source in the Indian context, and we're talking about it in the direct tax context, because as you would know, even in the GST, you now have TDS provisions. But essentially, this is my focus and scope will be on TDS on the direct taxes side. So India has, I think, perhaps one of the most extensive TDS regime in the entire globe. And when I talk about it, I'm talking about non-salary TDS. So, for example, salary TDS, of course, almost all countries have withholding provisions. And in some senses, that is in fact how the entire tax is collected. Because in case of an employer-employee relationship, the employer knows the entire income of the employee, and he's therefore supposed to deduct, taxes. So I will not be, we're not in my wrap-up will not be talking about that particular part of TDS. Now, in India, when we talk about the TDS on non-salary transactions, then you have two legs. One is international transactions, cross-border transactions, and you have the domestic transactions. Again, on cross-border transactions, we have Section 195, and that is really extensive in India, and in some ways has to be, because we still have capital controls, and also there is a particular regime, so you have to determine whether there is an income embedded in the particular transaction, and therefore do TDS accordingly. And there is now a well-oiled regime with regard to that. Then we come to the other category, which is the TDS on domestic transactions. And when I say that India has an extensive regime and one of a very comprehensive regime, that I am focusing, when I'm speaking right now on those on the domestic transactions. Now, having an extensive TDS regime and being able to handle it, then that in itself is an achievement. But we also need to keep in mind that there has to be a balance of convenience between tax collection and what is the the compliance burden on the taxpayer. In this case, when we're talking about the compliance burden on the taxpayer, we're talking about two taxpayers. One is the tax deductor, and the other is the person who has to take credit for these taxes. So if you look at it from that point of view, again, if I was to slice and dice this, there are certain, TDS provisions where essentially you want to, track that transaction and therefore, force a filing of a return. So we've had some very new TDS provisions. One is, as I can just recall, is on the liberalized remittance scheme. So if you are sending money abroad, for example, for education or anything, and it's above a certain amount, the financial institution is supposed to deduct TDS. Recently, we've just in this budget seen the introduction of another one, where if you're giving if a company is granting something like in the like a perquisite, then not just for a salaried person, but for even outside the salary thing, then there also there would be TDS. I believe that this was more to do with pharmaceutical companies and the kind of the kind of incentives they give in cash as well as in kind in order to capture that. Now, having looked at that part of it, we also have a very extensive TDS and TCS regime on business transactions, which two businesses do with each other. And as you know, if your turnover is above a certain threshold, and if you have purchases or sales above 50 lakh, these TDS and TCS provisions have been introduced. Now, here I think that the view of the government has been perhaps it's not just tracking of transactions. It seems that they also would like to collect tax, besides the advanced tax part of it. My plea and focus here is that that a TDS regime, the more extensive it is, one has to look at what are the compliances and the compliance burdens there. And can, without sacrificing your attempts to, track transactions, to get people to file returns and to collect taxes, can you make this compliance burden much less? So for me, incentivizing taxpayers, which is, in a TDS regime, which is the subject matter of this particular, session, for me, I would look at it from my point of view is that can we lower compliance burdens, because that is also a form of incentivization. When we look at it from this point of view, you see the complexity of a TDS transaction. I have to first track the transaction, then I have to decide whether I have to deduct at the time of invoicing or at the time of payment. And in my own ERP systems, they may not be geared up to track payments, they may be only geared up to track invoices. And then when I do that deduction, then I have to remit by the first week, 7th day or whatever of the next month. Then I have to do a quarterly return filing. And all of this when I do, then look at the other part of it. The other person has to take credits for these same transactions. And for taking a credit, it has to be in your 26-year statement, or otherwise you have to include it in your return. Then, they have to match with what has been reported to the department. So all of this creates, a substantial compliance burden on both the person who's deducting and the person who's taking these, the credits. My plea to is that 2017, and right in the first session, everybody was talking about the GST. My suggestion would be is that the GST regime has given us a singular opportunity to simplify the TDS regime in direct taxes. Why I say this is that today the tax invoice under GST is the single source of truth. And the two departments, which is the CBDT, they are now able to share data with each other with the CBIC. And therefore, if you can align your TDS provisions with the invoicing which is happening already, which the taxpayer has in his ERP system, if that can be aligned, then for the taxpayer that compliance burden reduces to a great degree. I mean, we as tax advisors, we work in that area in terms of helping taxpayers comply with all these provisions, and we think that the alignment in the TDS provisions with the GST invoicing, and of course it has to be looked at in great granular detail, but if that thing is attempted, it will be a win-win situation, because the income tax department will get whatever taxes it anyway seeks to get. It will be able to track transactions. On the other hand, for the taxpayers, it will be much easier to comply. So I request the chair to tell me when around 10 minutes is over, or if somebody can. Right. Okay. Another 2-3 minutes. So this is my first request and suggestion that whether this could be considered. I agree that this is not something which can happen immediately, but definitely if this is thought through, you can definitely get a much greater alignment, because the taxpayer is one. You see, departments are two, but the taxpayer is one. The guy, same person is issuing the invoice, he's also paying the GST, and he also has to do the TDS. So that was the first. The other is, is also that today in the income tax, you have to align whatever TDS you get, you have to take the credit with respect to an assessment year. Now, I have been both in government and have been outside, and I know that this idea has been talked about for a long time, but I think the time has come where you treat this as a ledger account. So therefore, once I have a TDS in my 26 AS, whatever with whatever safeguards you can, is that you let me take the credit and don't track me for a particular assessment year. Or at least, give me the scope across 2 or 3 assessment years, because frankly, I don't, from my experience, I don't see that leading to any, great leakage, but it will really help taxpayers in terms of, how they are able to source their credits. The last thing is that this is, and then I'll hand over to Mr. Vohra, who will do the heavy lifting on the statutory implications and the case laws. But one big pain point which for taking credit is that if by any chance the deductor has not deposited what he has deducted, and therefore then when I go and try and claim the credit, I don't get that credit. This has happened with with very large scale companies also. The point is that that what the case law says is, and what judicial opinion has held, is that in that case you cannot penalize the deductee, he has to be given the credit. But frankly, that actually doesn't happen in the system. The system, is still stops you from getting that credit, and this causes a lot of, pain and anguish to a lot of taxpayers. So, that is something which also could be looked at. So, in a sum, I think, by reducing the compliance burden with all of these kind of things, that would be the greatest incentivization which I could think of in the current TDS regime. So that's all I have to say as my initial, statements, and I'll hand it back to the chair.
Thank you, ma'am. I'll take off from where Ashutosh left. I must at the outset first thank Shailendra and TIOL for giving me this opportunity to present my views. In fact, ma'am, I am reminded of a similar meeting, a closed-door meeting with the then chairman CBDT in CR building almost 25 years ago. And I was a young professional at that time, and I made this suggestion that the government would do well to mine the TDS information. I, as a deductor, file a TDS return, but it is the department who only goes after me to find out whether it is paid in time, whether correctly deducted, whether or not, tax that has been deducted has been deposited or not. You don't go after the pay of the income. And then the then chairman told me that, this is humanly impossible. We can't possibly mine that information. But I'm happy today that basis the deduction of tax at source, the tax net is spreading far and wide. I think this is a good, important information and tool that the government can use to expand the tax base. And I think this must be increasingly used. But I'll come to the second part of it, of the increasing burden on the tax deductor towards the end. Now, ma'am, as complexities in business grow by virtue of these technological advances and the digitization, for the deductor, the complexities have also increased. The deductor today faces a challenge to determine whether or not this is a transaction which is subject to deduction of tax at source. If yes, under what provision? What is the applicable rate of tax? And I'll multiply by various examples. We have new section 194O, now which requires an e-commerce operator to withhold tax out of payment made to an e-commerce participant. There are numerous challenges that arise. an e-commerce operator is deemed to or is required to withhold tax even out of payment not collected by the e-commerce operator. Now we have that information available with us, but to saddle the e-commerce operator with the question of withholding tax out of payment that he has not received, invariably he would be, asked to shell out money out of his own pocket in order to withhold tax from the payment made to an e-commerce participant, where the payment is directly between the e-commerce participant and the customer. Now these are issues that arise. Consideration not received. Now whether a payment gateway or an aggregator should also be saddled with these obligations, there is no clarity. So this is one instance of challenges that may be faced by an e-commerce operator in order to comply scrupulously with the provisions of section 194 or 194O. So to my mind, the provision is certainly welcome, but there are difficulties in implementation. There are challenges that are faced by the deductor when this obligation is fastened on the deductor. And the consequence is the deductor suffers all the penal consequences, which I'll allude to in a little while. Now section 194S proposed in this finance bill of 2022, which requires withholding of tax out of profits on trading of virtual digital asset, the crypto. Basically, we all know most of these exchanges happen on crypto exchanges. Now, I, as a seller, may not know the buyer, but there is a requirement on the buyer to withhold tax out of the payment that is made to me. The buyer does not know the identified seller of the crypto asset. The exchange is acting in a fiduciary capacity. The exchange is only a custodian. You can't possibly fasten that obligation to the exchange. So I think the government would do well to think through this process of how this should be actually implemented. In actual practice, we may have difficulty and we may have a challenge. My suggestion is, like STT, you could have a similar transaction fee with respect to trading in crypto, which is collected at the source itself at the time when the transaction happens. Now, Ashutosh mentioned about section 195. I am reminded of the latest Supreme Court judgment in engineering analysis. That's a different matter that the government, not satisfied with that decision, has filed a review which is to come up for hearing. But nevertheless, the question that I am wanting to lay before this House is the determination of the question whether the payment constitutes royalty or does not constitute royalty. And that was a batch of matters with respect to assessees who, according to the department, had defaulted in not deducting tax at source on payments which, according to the department, were legitimately to be classified as royalty. And as you are aware, we changed the definition of royalty in our Income Tax Act with retrospective effect, with no corresponding amendment in the double tax treaties. Now that also led to a challenge, and the deductor was saddled with all consequences of being treated as an assessee in default under section 201. The Supreme Court, as of now, has put the controversy at rest, but at the same time the review is pending, so the suspense continues. That's one aspect of the matter. The second is this new equalization levy. Now clearly the two enactments are mutually exclusive in the sense that if the income is taxable under the Income Tax Act, then the charge of equalization levy under Chapter 8 of the Finance Act 2016 does not trigger. But who decides that whether this is royalty or is not royalty? If it is royalty, it will suffer tax under the Income Tax Act. EL is not payable. But if it, and the deductor will have to withhold tax. If EL is payable and it is not royalty under the Income Tax Act, it is the recipient or the e-commerce operator, the non-resident e-commerce operator, who has to pay the EL. So there is a complete confusion with regard to classification of these items. And while on section 195, I may also point out that the courts have upheld the extraterritorial operation of the provision relating to TDS. So many non-residents are at a loss on how to comply with this legislation, which seeks to saddle them with onerous and consequences if deduction of tax is not made in compliance with the provisions of the Act. Then on digitization, the challenges that arise, I'll just illustrate by a few examples. 194J, I was asked this question, that I book an Uber, I make a payment. Am I required to withhold tax? Or Uber, for instance, Uber India makes a payment to Uber US. Now, in that situation, whether tax withholding is required, I would tend to take the view that one needs to analyze the legal effect of the transaction before you can take a view one way or the other. And I had, on an analysis of the entire arrangement, come to the conclusion that the privity of contract is between the passenger who flags the car and the car driver. Actually, the owner of the car, whoever receives or pockets the fare. Now, in that view of the matter, there is really no payment for carriage of passengers triggering section 194C or 194J for that matter. There were decisions and the stand of the revenue was known. The revenue said tax needs to be withheld with respect to these payments. There is one decision of the tribunal taking a view in favor of the taxpayer saying tax is not required to be deducted. And we have a recent decision from the UK court which said that the driver is actually an employee of Uber for purposes of compensation, for purposes of receiving the minimum wages under the UK Labour Act. So these are complications that arise in order to determine the characterization of the particular payment. What is the nature of the payment? What is the head under which tax needs to be deducted if it needs to be deducted? I was recently writing an opinion for a similar query, and that's to do with digitization, and we'll see how the world has progressed. This particular site has aggregated various hospitals. So if a patient approaches this site and the site has doctors available on their roll, if it is recommended that a surgery needs to be done, the site will fix with a hospital that the surgery will be done with a hospital, but they have their own doctors who will conduct the surgery at that hospital. Now, this site does not own a hospital. It can't possibly raise an invoice. The invoice is to be collected by the hospital. The hospital withholds its share of the pre-agreed share between the two parties and then makes it available to the balance to this site. Now, the question was whether this can be treated as an arrangement between the hospital and the site such that the site is required to withhold tax under 194J. The flow of money is in the reverse direction. That's what technology does. Now, whether it is possible to comply with the provisions of section 194J in this situation is difficult. Unfortunately, I'm running out of time, so I'll very quickly point out. Ma'am, the deductor, in my understanding, acts as an agent of government. And if the deductor fails to comply, in that situation, the deductor is treated as an assessed in default under 201. There is recovery of tax. There is levy of interest under 201 1A. There is penalty under 271 capital C if it is without reasonable cause. If he fails to pay or deposit the tax in time, there may be prosecution. There may be disallowance of expense in terms of 40AI or 40AIA if tax is not withheld. Now the question is that if the deductor is really fulfilling a role and acting or stepping into the shoes of government in complying with this tax withholding obligation, the deductor clearly needs to be incentivized. And I would think, I'll take cue from what Ashutosh said, once you have the GST database, you have all the information with you to go after the recipient of income, because after all, deduction of tax at source is a means to an end. It's not the end itself. The liability is of the recipient of income and not of the deductor. So in that sense, I think it is an important point to make that once you have a database, this compliance burden, which involves a huge cost both in terms of time, money, needs to be reduced for the deductor. Then proactively, that's my suggestion again, the CBDT should come out with circulars. There was, I remember, ma'am, for your benefit, in a similar conference where 300 odd people were there, circular 715 was brought out giving FAQs. Now, if you have proactively, brought out similar such circulars, it will help alleviate a lot of confusion and a lot of misunderstanding on these accounts. So, circular should be brought out. I don't think whether it is feasible to have an advance ruling. If possible, an advance ruling should be made available to a deductor if the deductor is in doubt. The ledger account that Ashutosh mentioned, I would also feel that if it is done, it will cut through a lot of litigation. Speaking for myself, I follow the cash system. That tax is withheld by clients on my bills on an accrual basis. There is always this mismatch. So one is at pains to deal with this question. So, and lastly, I will leave this thought with you that if you want to penalize the deductor for not complying with the provisions of the Act, and like section 271C, if we have a provision saying if the default is without reasonable cause, then you are saddled with these consequences 201, 2011 capital A, 271C which is already there, or the disallowance of expense under 40A, 40I. So it is time, I think, that the deductor who is doing a yeoman service to government needs to be recognized and needs to be incentivized, and the compliance cost and the obligation, the onerous obligations need to be toned down slightly. Thank you.
I request Ms. Isha Singh to share her thoughts with us online.
So to start with, a very good afternoon to all the honorable guests, the organizers, the delegates, the esteemed chair, and my co-panelists. Heartiest congratulations to all the winners of TIOL awards in various categories. Albeit virtually, it's a privilege to be amongst you and share my thought on the topic. I echo the thoughts of my co-panelists that they shared around the topic, and would like to add on some quick points on the same. My first slide is related to the data, which reveals that there is a growing trend in share of TDS collections over the past few years. Now, one of the major reasons behind the same is the sheer access to taxpayers' data by the tax authorities and the multiple ways and enhancement in the ability of tax authorities to process this data. Now, this has also been highlighted by the Honorable CBDT Chairman in the referred article on my slide. Clearly, we can see that digitalization has played a huge role in tax administration and data collection. Going a little deep on this aspect, we can see that today there are data available from various sources thanks to digitalization. A much wider range of information is available with the government already, which wasn't possible earlier. Now, CBDT has signed MOUs with various authorities such as CBIC, the SEBI, and it also has exchange of data from various banking and financial institutions and other sources such as MCA and the Enforcement Directorate included. Also, the mere scope of detail that needs to be furnished to various authorities is growing manifold over the years. For example, the statement of financial transactions requires a growing kind of a data that needs to be shared with the authorities. Also, there is Form 26AS, which is becoming more and more comprehensive. And there is this whole GST ecosystem wherein data is available in the form of e-invoices and invoice level data is available with the authorities. With this, in a way, we could say that the role of TDS as a primary source of mapping transactions is losing relevance in some way. However, what about TDS role in collection of tax itself? If we see this slide, the chart indicates that barring the top few sections which contribute the maximum to TDS collections, the other ones do not play such a significant role. What we see is that, however, there are a few sections which contribute like salaries, payment to contractors, and dividends. These are the main sections which contribute heavily towards the TDS collections, and the other sections do not contribute as much. Considering this study, while this data is only related to FY 2021, there is a similar trend available even for the past years. Now, considering this similar study, Justice Ishwar Committee had recommended rationalization of the
TDS provisions back in 2016. However, we are yet to witness the same. What we are rather witnessing is contrary. We are witnessing an ever increase in scope of the TDS provisions. We saw the section 194O, which was introduced on e-commerce operators with effect from 1st October 2020. We saw 194Q being introduced on sale of good transactions with effect from 1st July of 2021. And we also see in the recent budget that there are two more sections introduced, one related to the TDS, which are paid by companies to their various channel partners on the benefits and perquisites that they pay to them, and the much debated 194S on transactions related to virtual currencies. So the two things that I would like to conclude with these last few slides is that somewhere TDS is losing relevance as a tool to collect data, with digitalization being there. And secondly, apart from the majority of three or four sections, it's not even contributing significantly to the tax collection per se. With this, if we could look at the challenges and the compliance burden that the assessees face, there is clear need of simplification that the industry demands. Uh, on this slide, I have tried to bucket the issues around these 5 parameters which are globally accepted for a good tax policy. On the first parameter, or that is of neutrality, we appreciate that it is neutral as credit is available to the same to the deductee. Now, one of my co-panelists was just mentioning that albeit there could be some delays and difference in the financial years in which this is claimed, but overall, we could still say that this test gets passed as far as TDS provisions are concerned. On the second aspect of efficiency, we see that there are a host of issues. Now, there are clear issues related to year-end provisions, wherein TDS is required to be deducted at the time these provisions are made. However, many a times we do not know the details of the deductee at the time of making of these provisions. In such cases, there is a clear lapse and there is a clear delay till the time the details of such deductee is available to the companies. In FMCG specifically, there is a such a huge provision which gets made towards the end of the year for advertisement-related costs. So this issue clearly hurts us in many ways. The second issue could be around the lower deduction certificates that becomes a yearly exercise for some of the loss-making companies. Now they have to interact with the tax authorities regularly and try to get a rate mutually decided. And this becomes again a burden on a year-on-year basis. So the suggestion around this could be, if this could be brought at par with something like an advance ruling, which is valid for a period of 3 years and not just 1 year, this could ease a lot of burden on the assessees. There's also another side to the tax collection story that I just mentioned. The data says that there is around 30 to 45% of TDS which gets refunded annually. And there is a clear interest cost also.
Isha, you have 2
that
more
is
minutes.
Yes, ma'am. I'll quickly conclude. So there's clearly an interest cost also. So there is a lot of administration cost on the department as well. Apart from that, there are a host of other issues that we face in implementing of TDS provisions. So I would not want to go on to the rest considering the time. I would just go on to my next slide, wherein I have mentioned the top broad asks that the industry has to make. So what is it that we are really looking at? We are requesting for some sort of a streamlining and rationalizing of TDS rates and threshold. We are looking at retention of some top 3 to 4 categories where the collections are higher. Like my co-panelist mentioned about a tax ledger scheme, that would give me an intimation if there is any lapse on my side, and that would give me a real-time picture of my credits as well as my deductions that are need to be made. For data collection, like I earlier mentioned, other sources like GST and other SEBI and MCA, all those data could actually be sourced. There could be some sort of a reduction in interest rates and removal of penal provisions also, which could be looked at. because many a times this happens without the intentions on part of the assessees. And if we could do away with the requirements of certain compliances like the TDS certificates, because already data is available in the form of 26AS and other forms. Uh, Apart from these thoughts, I had another thought: if we could have some sort of a specialized TDS rates on the basis of compliance rating of these sellers, rather than keeping it on the part of on the type of transactions that take place. So, in a nutshell, if I have to summarize, I would say that digitalization should be somewhere inversely proportional to the scope of TDS provisions, and incentivization to assessees lies in simplification. With that, I close my presentation. Thank you. Over to you.
Thank you, Isha. Thank you for sharing your views with us. And now it is my turn to sum up what the three eminent speakers have spoken and share my views. So I think each one of them has made a pitch that there should be reduction in compliance.
We need you a little louder, ma'am.
And
Ma'am, can you be a little louder?
louder.
Yeah, your voice is not reaching at the back. I think you need to get the mic a little closer to your mouth. Yeah.
So I think all the three speakers have made 3 points which is common to all of them. One is that they all want for simplification, reduction in compliance burden, and they all want that the tax deductors should be incentivized. Now, so far as reduction of compliance burden is concerned, government is already working in that goal. In our endeavor has always been to improve voluntary compliance and reduce cost of compliance. That has been an endeavor, and we are working in that direction. And every effort is made to ensure that compliance burden is reduced. But yes, the new fields are coming up, new technologies are coming up. To deal with them, we have to come up with a law. And then once the things become clear, we also get to know through your experience and through the information which we have that how it has to be smoothened further. So that is always a goal of the government. Now, coming to the issue that we should align with GST, yes, we are now sharing data with GST. That data is being studied by us, and then if there is a requirement that the two departments can work together and that can reduce your burden, we will be looking into that aspect. And there is a request for ledger account. I think that is too early to make a request because so many deductors, like if I compare the situation which was in 2011 and 12 when the CPC TDS was set up, and now there has been a lot of improvement in compliance. There has been a lot of reduction in the grievances which the taxpayers have been raising, the deductors have been raising, and it is more or less stabilizing. And the statements which are being filed, there has been a lot of improvement, and the deductees, they are able to get the credit for that. It has been the trend over 3-4 years. There has been a significant improvement in that, and we are getting very few grievances on that account. And now coming to the next issue, what Ashutosh said, that we have now introduced one more section this year, that is 194R, for deduction of tax on freebies. Why has it been introduced? I think there is a need to ponder over that. There has been a provision under the Income Tax Act which says that amenities and these privileges are liable to tax, but nobody was offering it for tax. So there is a cause to bring a TDS provision so that it is taken care of, and we can track those freebies which are being given to them, or the perquisites which are being given to the people. And the TDS is not only for the tracking the transaction. If you read section 4, which is the charging section under the Income Tax Act, that clearly says that tax will be paid either in advance by way of advance tax, or it will be by way of tax deduction at source. So it is a mode of collection of tax. And coming to incentive part, I will say that we all are governed by the Constitution of India, and if we have been given some fundamental rights, at the same time we have been given some fundamental duties also, which we all have to follow. So far as the deductor is concerned, it is a statutory liability which has, I will not say liability, statutory provision has been created under the law which says that the deductors shall be deducting tax. So for doing that, I do not think so. It cannot be equated with a service, that for service you have to pay fee. When we are getting our taxes collected through banks, they are rendering a service. For that, payment is being made. So it is not at par with that. And secondly, the tax which is being deducted by the deductors in a month, that is being paid in the next month by the 7th. So there is already a float. The taxpayers, the deductors are keeping that money with them. I have information with me right here in front of me of at least 10 big deductors. They are using at least 40 crore to 110 crore every month for their purpose. So that is already a float with them. That money is being used by them. Maybe they're also earning interest on that. So that is an enough incentive for them. And generally, the liability is on the people who have a system and they can develop the software to do it. So just keeping that in mind, the two provisions which have been brought this year for deduction of tax, they have been brought from 1st July 2022. Why? First quarter we have not enacted, we have not proposed it to be enacted because to allow the deductors to set up their system, and so that if we have to come out with some clarification, we can also give it, and then you can set up your system so that you can start deducting. So keeping that in mind, there should be less burden on them. They should, this was kept in mind while bringing it from 1st July. Now, Mr. Vohra referred to various court decisions, and he also said that CBDT should come out with circulars. So in that context, I will only say that whenever CBDT has come out with circulars and your colleagues have not liked it, they have gone and challenged in the court. So I don't think so the situation is going to improve so long as your profession is flourishing. So we remain at the same place where we are today. Nonetheless, CBDT is mindful of the fact that wherever there is a requirement, there will be clarification issued. So far as the engineering analysis case is concerned, review is pending. So after the decision of that, the issue will be final. I think with that, my time is also up, and thank you all. Thank you very much for the patient hearing to this panel.
Thank you so much to the panelists. But before we go on to the next session, we would like to invite questions.